I'll say something that's a little bit cynical, forgive me, but you do have a situation where the president's going to want to win those midterms. So he's going to flood the zone with capital. He's going to drop interest rates. He's going to try to perk up the economy to get people to vote with his team come the midterms. That bodes well for the stock market. I think it bodes well for the altcoin market, and I think it certainly bodes well for crypto, Bitcoin in particular. I'm going to stay to my $150,000 price prediction. I'm off by a year, I think, but I don't think I'm going to be off by much more than that. I think we get to 150 next year. Remember, you need a slightly less OG selling, interest rates lower, and the consistency that we are seeing in ETF flows.
When election season heats up, so does the economy. Or at least, that is the playbook. With midterms approaching, the incentive to pump capital into the system grows stronger. The goal is simple: make people feel wealthier and more confident so they vote accordingly. That often means cutting interest rates, boosting liquidity, and creating the illusion of economic strength. Markets tend to respond in kind, especially the more reactive ones like crypto and altcoins. Anthony Scaramucci sees this pattern clearly. He is holding firm on his $150,000 Bitcoin prediction, not because of wishful thinking, but because the mechanics are lining up. Less selling from early holders, steady ETF inflows, and a likely policy shift toward easing all point in the same direction. To him, this is not about hype or FOMO. It is about understanding the political and economic forces in motion and positioning accordingly. The setup is there. The money is moving. The question is whether you are paying attention. This is not just about charts or predictions. It is about who is pulling the strings and what they are trying to achieve. When the stage is being set this deliberately, being on the wrong side of the trade is not just a mistake. It is a missed signal. Let's bring you clips from Anthony Scaramucci's explosive interview to gain more insight. Please don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for tuning in. Enjoy the rest of the video.
A couple of things. You could be an expert and you still get a lot of things wrong. So I'll set the stage for you. I think there was a jailbreak in November of 2024. So whatever you think of Donald Trump, he's pro-crypto. And whatever you think of Joe Biden and Gary Gensler, they are not pro-crypto. Okay, they were really trying to hurt the industry. In some cases, trying to put the industry out of business in the United States, or certainly at least off the shore of the United States. And so one of the more positive things about President Trump is he brought in a team like Paul Atkins, SEC chair, Governor Waller, Chris Waller, Nikki Bowman from the Fed, who are all positive on the world of tokenization and payments and positive on Bitcoin as a piece of digital property. And they want to get the regulation right and fair for the consumer, the user, and the eventual investor. And so that was a very big bright spot. So when you got the jailbreak, Aaron, we had a nice move up, and then people said, okay, this is great. These tokens are going to 150 to 200,000. That's what we think they're worth. Here are the reasons why. But then a couple of things happened that we did not fully anticipate. Number one is the whale selling. And again, you just have to look at the wallets. There's probably $4.6 billion of whale selling this year into the ETF demand and other retail and potential institutional demand. October 10th was a capitulation. Some of that whale selling happened before October 10th, but you had a leveraged situation in the markets. The president put out a tweet related to rare earth minerals, and it was just that one little tiny spark that caused a blow up in the markets. There was a massive amount of deleveraging. It impacted some of the market makers. It forced a liquidity crisis, a result of which you saw a little bit of an altcoin bear market and a 30% drop, which, by the way, is a garden variety drop in Bitcoin, but it's still a drop that wasn't expected. So we watched that meter between bull and bear. We were tilted to the bulls. We're now decidedly very bearish. I think on a scale of 1 to 100, the bull meter is something like 13 or 14. And so I like that for 2026, because that means the sentiment is so negative that we just get a few positive things going, perhaps a little bit of less whale selling. We'll see a retracing back to the Bitcoin 52-week high. But but I got it wrong. I didn't expect that kind of selling this year from the whales. I think, this is another part of the story, but it's more minor, is we would have thought if you invited me on in December of 24, I would have said we were going to get both pieces of legislation passed by the end of the year. The Stablecoin Act, but then also the Market Structure, the Clarity Act would have also been passed. That didn't happen. So bad news for us. The Democrats still hate crypto. We could pretend otherwise. There's a few that don't, but they've made this thing very partisan. And it's sad to see because it's against the interests of the investor, the consumer. It's against the interests of people that are transacting in the financial services institution. And the technologies that you and I study are actually technologies that can unleash lots of cost savings into the economy, which then leads to more money and capital being deployed into economic innovation. And so you can chat GBT this, but I've done some homework on this. There's depending on how you measure it, there's $3.5 to $4 trillion worth of transaction verification expenses in the global economy per year. It's credit card fees, wire service fees, admin fees, lawyer fees, and banking fees on doing things with mortgages. If you could get that down, let's say you cut it in half, you can unleash a $2 trillion capital spend in other areas of the economy, or just better wages for people. This happened during Web 1 and the internet in terms of the S-curve explosion of efficiency in the economy. I would like to see that here. And it's hard, frankly, because we haven't gotten it done yet. It's not going to happen by the end of the year. I think we both know that. We've only got 10 days left to go in the year. Could it happen in the first quarter? Maybe. But you've seen the ugly head of Democratic antagonism again related to our industry. I think it is detrimental because I do think there's still a market expectation that it's going to pass. I do think you need that clarity, frankly. It's an interesting, because the act is appropriately named. It's apropos. You got to get it because you want to start that process of tokenization. The name of your show is Altcoin Daily, right? You want those altcoins to move. What are a lot of those altcoins about? They're about use cases. They're about utility. Now, you and I were on the show Killer Whales. We had that one meme coin guy. I was blasting away at that meme coin. Since we did the show, that meme coin is down 80 or 90% because it doesn't have a lot of tangible value. But then there are other coins that you and I know, like Solana or Avalanche or other layer one technologies, Aptos or Sui, that could be used in the process of tokenizing financial assets like stocks and bonds or real world assets like real estate. So there's a bifurcation. There's Bitcoin and then there's altcoins, and there is real use cases, real utility for some of them. But you're not going to get that deployed until you get that clarity that's required from the government in terms of what the rules are. Because, who's going to spend the kind of money that you need to switch over the financial system if you're not guaranteed that you're going to be able to use it? You certainly don't want to be sued in some kind of regulatory enforcement situation, So that's the dilemma that we're all facing right now. There probably is a poly market on it. I haven't seen it. I could only guess at it. I would say it's got to be north of 50%. Because hear me out, from a political strategist or gamesmanship point of view, Elizabeth Warren has gotten many things wrong, but the most specific thing she's gotten wrong related to our industry is there is no anti-crypto voter. You remember that meme she put out? I'm building an army of anti-crypto people. We're going to attack crypto. Well, it turns out there's no anti-crypto voter. Moreover, there are crypto voters. They took Moreno in Ohio. They gave him $40 million, and he blew Sherrod Brown out of the seat. He was the ranking head of the Senate Banking Committee, decidedly anti-crypto. Bye-bye, Sherrod Brown.
2025 was a wild ride for crypto. Optimism surged after pro-crypto policymakers stepped in, but it quickly turned as whales dumped billions, leverage collapsed, and regulatory clarity never arrived. Key legislation stalled, freezing progress on tokenization and innovation. Markets flipped from bullish to deeply bearish. Still, low sentiment means any good news in 2026 could trigger a strong rebound. The bigger question now is whether lawmakers can finally stop dragging their feet and let the next wave of progress begin. Crypto's future hinges on more than just price charts. Voter demographics, political games, and regulatory clarity are all reshaping the landscape. As younger Democrats embrace innovation, older voices resist, while gerrymandering limits true democratic choice. Market-wise, optimism brews for 2026 with expected rate cuts and strong ETF flows. Despite past timing misfires, momentum is building. Bitcoin at $150,000 isn't off the table, and top altcoin picks like Solana and Avalanche are gaining traction as real-world utility takes center stage. Let's watch more clips from the interview.
So I don't think the Democrats want to be on the wrong side of this, the younger Democrats. You know, if you're 60 or older, you're probably anti-crypto and you're probably miserable and you hate Donald Trump. If you're 60 or under and you're a Democrat, you probably want to be a part of the future and you don't need the political action committees associated with crypto spending reams of money to defeat you in the upcoming election. So there's a combination of those things that are going on. But here's something that we have to tell your viewers and listeners that they need to understand. Because of gerrymandering, because these politicians are able to slice and dice their districts to benefit themselves or their party, and I'll say this rhetorically, but you'll get it, are we in a real democracy if the politicians are picking the voters? I thought the voters were supposed to pick the politicians. But you're in a situation where we only have 40 districts of the 435 districts that are now considered purple or swing state districts. And so you got to think about it, or swing districts. You know, it's astonishing to me. Most of this stuff, 92% of the districts are set in stone as a result of the gerrymandering. So we have to fix that too. I mean, there's a lot of things we need to fix, by the way, Aaron. You know, we got to fix the money. You know that. We got to fix the rail system for the world of financial assets and tokenization of America's assets. But the big thing for me is we got to fix the political system. We got to make it fair. You know, you have certain states that could have 45% Democrat, and every representative is a Republican. You have this, or vice versa. It could be 45% Republican, and every representative is a Democrat in the state as a result of these games that they're playing with each other. So I'm a still believer in the don't fight the Fed approach to market activity. And so the recent inflation numbers and the decision by the president to put a Fed interest rate friendly chair in place. And of course, Jerome Powell is leaving in May of next year. And so the president has the opportunity to do that. I think any one of the picks that he's looking at, any one of those, in my opinion, I think would be setting the country up for 2 to 4 interest rate cuts next year. And so it would be very hard to go against the market. Yes, you could look at metrics and say it looks expensive. In some cases, particularly some of the Mag 7 looks very expensive. But if you're going to cut 100 basis points off of the interest rate cycle, it could steepen the curve, which is a little bit riskier. But I still think the curve's reasonably steep right now. But to me, I don't know. I got that as a buoyant market in 2000. I tell people I'm right directionally, but I've been wrong on timing. I thought we were getting the spot ETF in March of 2022 because we got the futures ETF in November of 21. And if you looked at the laws, that's what should have happened. That's the reason why Gary Gensler actually lost the lawsuit. You know what I mean? And he lost that lawsuit to Grayscale. So it's very hard to predict these things timing-wise. But here's what I like going on. Remarkably bearish sentiment going into next year. Up against the backdrop of real rate cuts. So I'm going to stay to my $150,000 price prediction. I'm off by a year, I think, but I don't think I'm going to be off by much more than that. I think we get to 150 next year. Remember, you need a slightly less OG selling, interest rates lower, and the consistency that we are seeing in ETF flows. And I don't think that those flows are going down. If anything, the Wall Street selling machine, Aaron, is just gearing up And I think we're going to have robust net inflows to those ETFs next year. So 150 shouldn't be out of the question. And I will tell people, because I put my money where my mouth is, in the last month, I've bought 4 more Bitcoin for my family. And so I am putting money in at these levels, expecting higher prices. I would say my 3 top coins then would be Solana, it would be Avalanche, and believe it or not, and it's done poorly, frankly, but it would be the Telegram token known as TON, which is called the TON coin, TON. Unfortunately, I bought it. I mean, this tells you how wrong you can be and how humbling this life is in our world. I bought that at 750. I thought I was a smarty pants. I dug in at 4, and it's now trading at $1.50. So I've gotten it wrong thus far, but I think that's going to be a token that's used in that network, and I think Telegram is going to grow its network over time. And but listen, the macro forces in the altcoin market are also reflected in those prices.
What is it about Solana that makes you so bullish versus Ethereum versus everything else?
Cheap, low cost, very fast, easy to use, easy to develop on. And I'm not an Ethereum negative person or anything like that. I'm just talking about it from a comparative. I believe in a multi-coin world, but I just like that one because I think it's got all those attributes.
Bitcoin is kicking off 2026 with a surge of momentum, climbing over 8% and touching $94,000 in the first week of January. This isn't just a New Year's bounce. It reflects deeper market dynamics, strong ETF inflows, bullish options positioning, and growing demand for Bitcoin as a geopolitical hedge. Amid the fallout from major global events like the U.S. capture of Venezuela's president, traders aren't panicking. They're rotating into Bitcoin. That speaks volumes about where real confidence now lies. This aligns closely with the outlook Anthony Scaramucci recently laid out. He argued that bearish sentiment, combined with policy-driven rate cuts and increasing ETF demand, creates the perfect setup for a bullish 2026. So far, the data supports that view. Spot Bitcoin ETFs just recorded their largest single-day inflow since October, with $700 million coming in, indicating that institutional appetite is still rising. With minor issuance falling short of demand, supply is tightening fast, which fuels upward price pressure. Options markets are now targeting 6-figure highs. While traditional markets wait on the Fed's next move, crypto is charging forward. Investors are pulling coins off exchanges, signaling long-term conviction. The $100,000 milestone is no longer just hype, it's within reach. Scaramucci's $150,000 prediction, once considered aggressive, is starting to look realistic. With macro tailwinds building and political incentives lining up ahead of the midterms, the momentum is real. This isn't just a market rally. It might be the beginning of Bitcoin's next defining breakout. As we wrap up, with ETF inflows rising, is Bitcoin finally entering a more mature phase of adoption? Let us know your thoughts in the comments below. Share this video, hit the like button, and don't forget to like and subscribe. Thanks for watching. See you in our next video.